Rockets and Knicks were in Game 5 when O.J. started that fateful drive. His four-way hazard lights were blinking, and no one knew what the Jews was thinking.
I've been to Reno, Chicago, Fargo, Minnesota, Buffalo, Toronto, Winslow, Sarasota, Wichita, Tulsa, Ottawa, Oklahoma, Tampa, Panama, Mattawa, La Paloma, Bangor, Baltimore, Salvador, Amarillo, Tocopilla, Barranquilla, and Padilla, I'm a killer. I've been everywhere, man. I've been everywhere, man. Crossed the desert bare, man. I breathe the mountain air, man. Of travel I've had my share, man. I've been everywhere.
This is Oversight Live, your advocate for good governance. We're putting the site back in. Oversight. Here's the watcher on the wall, your host, Ben Carpenter.
Good evening, Alaska. Welcome to Oversight Live. I am Ben Carpenter, your host for the evening. Oversight Live is your road to Juneau until one can be built. It is cost prohibitive for most Alaskans to get to Juneau to provide oversight of their legislature. And that is expensive with time and expensive with money because there's no road. You got to take a plane or you got to take a boat if you want to physically be there. But we have technology, and technology will allow us to watch what's happening as long as it is being recorded and broadcast, and then we can watch it again. So you can go to KTOO Gavel Alaska website and watch the recordings live or recorded and answer your questions for yourself. Or you can come to Oversight Live, where we are going to review pertinent information, stuff that I think is pertinent. And you have the opportunity to ask questions and engage with the host and with others through this wonder of social media. All right. So we're broadcasting on YouTube, X, and Facebook. If you've got questions or comments, you can chat them in the window. They'll come up live. We'll be able to have a conversation about it. If you're watching the recording, well, you obviously can't chat live. So you can drop me an email at producer@oversightlive.com, and that will afford me the opportunity to get your message and respond to you. And I will do my best to respond to you. There you go. There's comments on there so you can see what's going on. And answer your questions if you send me an email. All right. I also may use your information on the air. If you've got a good question, there's likely other people that have got the same question. So we're going to, it's an educational show, right? We exist to help people understand what is going on in our government. I spent 6 years in the legislature, in the House of Representatives, and I am using my experience to help answer your questions. All right. So the only dumb question is a question that is not asked. All right. And we're going to try to have fun because I mean, it's an American pastime to make fun of politicians, right? Right. All right. Well, let's get going. So, philanthropist Frank, you have really got to change your name, Frank, because I have a hard time saying philanthropist really fast. Frank asks a question. Does that count? He has a great theory. Does that count? See, Frank says, I have a great theory. Does that count? I don't know. What's it on? Is it on HB 93 or is it on pipeline taxes? What's your theory? All right. Feel free to share your theory with us, Frank. I'm all ears. Love to hear it. We did not have the legislature. I say we were not able to watch the legislature today because the legislature never had a meeting. However, there were two meetings that happened on Saturday. We have only covered a little small fraction of the meetings that happened on Saturday. I'm going to go back to Saturday. I'm going to show you something that I think is really important that we just didn't have time last night to cover. So again, this is back to the conference committee, and it's a presentation that began about the time that we ended last night. So, and this is going to be focused on taxes, on on subject matter expertise that's advising Glenfarne and is going to be advising the legislature. Okay, Frank says, why I give money to all funds. Well, that's because you have money to give. That's why you give money to all funds. If you didn't have as much money, you wouldn't be able to give them to all funds. Holy moly, Frank. Okay, I'm going to have to take this. All right, Ben, I know you're busy raising non-indigenous animals. Yeah, I can't raise moose, can I? And growing non-indigenous plants, but I did my own research. Bills awaiting transfer to the governor. As I have found out, bills that have passed both houses and now need a governor's signature or not, once sent to the governor, this is the normal process. HB 93 and many other bills are in the status of waiting transmittal to the governor. What does the law say about that status? It can be sent to the governor for signing or not. Can it be sent to the governor for signing or not? Did you finish your thought with that question, Frank? So, awaiting transmittal to the governor indicates that the legislature hasn't transmitted it yet, and that is a decision that somebody at the legislature has to make. And to be honest, I'm not exactly sure who is the decision maker at this particular time, whether that's the speaker or the speaker's staff or the Senate president, Senate president's staff. It's one of the houses. Since it's a HB House bill, it's probably the speaker. Whether it's a formality and the chief clerk is waiting, whether they've given that authority to the bill sponsor and we're waiting on the bill sponsor, I'm not sure. Probably the best way to get the answer is to call the sponsor and ask, and I think it's Representative Himshoot, and ask what's going on with her bill. When is it going to be sent to the governor? And she would probably be the one that would know. Okay. There, we started out another show talking about HB 93. Or maybe it was Senate Bill 93, I don't remember. Anyway, you gave me the answer. I'm sorry. I read what you wrote and I didn't see an answer in it. It's part of the normal process. Yes, I know that. Are in the status of waiting transmittal to the governor. What does the law say about that? It can be sent to the governor for signing or not. Or not. I guess if the legislature wants to pass it and then they never send it, then it's on them, right? They had a bill that the governor could sign, but they chickened out and didn't send it to him. I don't know. For some reason, maybe they didn't want to. Okay. Or B, okay. If it is not sent to the governor by the time a new legislative session starts, it dies. Yes, we covered that. Here's your theory. Who is more Alaskan? And all the other bills awaiting transmittal to the governor. A newly elected governor in Alaska is sworn in and officially takes office at noon on the first Monday in December following the November general election. The Alaska State Legislature officially convenes its new regular session on the third Tuesday in January every year. Yes, but those individuals cannot sign that thing into law. They cannot. They wouldn't be able to. It's a different legislature and different governor. You're probably going there because that's the obvious answer, right? Frank is really, I have to commend Frank. He is following up on HB 93 like his life depends on it. He really wants to know what's going on with that bill. Craig says, love the pressure that Cronk and Ruffridge are putting on the majority. Yeah, they've done a pretty good job. I mean, it's interesting because I know having conversations with legislators who are in Juneau right now, the majority on the conference committee is meeting. Minority members are not invited. We talked about this, and I identified that this is the way it works, right? The majority members, this is the way we do it. The majority makes the decisions, and the minority is just there to be able to vote. They're not even invited to the meetings. So you got something being figured out with this bill, and 4 of the 6 individuals in the conference committee are participating. The other 2 are not even invited. Like, we're not even going to tell you which room we're meeting in. You're not invited. Okay, Frank. Newly elected governor in Alaska is sworn in and officially takes office at noon. The Alaska State Legislature convenes its regular session. With that information, the current bill that needs to be signed into law, lame duck Governor Dunleavy, not afraid to use his red pen. It behooves the Democrats to wait until after the general election for signing of the bill. It doesn't improve the odds that he will sign it. He would still veto it. Yeah, I don't know. Getting the legislature to take action or transmitting it to him after the election, I don't know what it gets him. How does this benefit them of getting the bill passed or signed by the governor? I don't see the connection here for how this strategy is going to benefit the ones who want the bill to go through. This is an example of why a version of the Open Meetings Act or Open Meetings Rule is needed with the legislature. Could be. The new administration. Wait for the... No. New administration, new legislature, bill passed, doesn't carry forward. They got to get that signed with this governor, with this legislature. Once the next legislature gavels in, that bill is dead. So you can't bank on the next governor to sign it. You'd have to reinstitute it and repass it through the legislature. My understanding. I don't think that is a new governor is sworn in before a new legislature. That's an interesting theory. That between December, whatever it is, 8th or 7th, December 7th, when the governor is sworn in and when the legislature takes. Okay. Can the new governor sign the piece of legislation from the previous legislature in the interim between? I don't know. Frank, maybe that is a possibility. I do not know the answer to that question. Time will tell. It's a good theory. It's a really good theory. Okay, on to HB 381. So we're going to hear from Glenn Farn again, but through Mr. Mahoney, who is going to introduce himself here, and we're going to have a conversation about taxes. Of all the things that we could be talking about on a Tuesday night, let's talk a little bit about taxes, because somebody's going to pay for it. Who ends up paying for it? Tax increases.
For the record, my name is Stephen Mahoney. I'm of counsel for the law firm of Manley, Frodigum, Bankston in Anchorage, Alaska. I have been dealing with Alaska taxes since 1979, when I started as a junior tax accountant for Exxon Corporation. I worked through separate accounting in the early 80s with Will Condon and Tom Williams. I'm a 40-year Alaskan. I was an audit coordinator for Exxon on state income taxes for the 50 states that we paid taxes in back then. Last in the industry, I was the VP of tax for ARCO. Most recently, I've had about 20 years of practicing tax law in Anchorage and around the state for most, I would say almost all the major taxpayers in the state, oil and gas and otherwise, as well as nonprofit corporations. We have a lot of IRS dealings. I was asked by Glenn Farm to assist in a clinical review of this amendment to and other tax issues that came before you. Interestingly, our firm and myself, we work with an organization called Bloomberg Tax. Bloomberg Tax has the treatise on taxes in the United States. They deal with all 50 states. They do federal, they do trusts. We are the editors for Alaska corporate net income tax. So we have analyzed that tax in relation to any investor coming to the state would look at that to see how they are impacted in taxes. Most recently, we've been asked to be editors for the PTE tax throughout the United States. So the individual states that apply PTE taxes, pass-through entity taxes, we edit the Bloomberg tax treatise for all those states, including the state of Alaska. I guess I start with Glenn Farm or any potential taxpayer in the state of Alaska. The number one goal is to have certainty in the taxes that they're going to pay. Understanding those taxes, understanding the way the taxes impact the company starts with the statute. The more clear and definitive the statute is, the more clear and definitive your understanding as a taxpayer of the taxes are. And in Glen Farm, we have a different circumstance than we've had in the past with a lot of our corporate net income taxpayers. This is a new type of organization in terms of financing one of the largest capital projects this country's ever going to see. And the financing arrangements that an entity like the Glen Farm entity, or I'm sorry, 8-Star and the entities of which Glen Farm is a member, are based on those types of financing, and therefore the interests of the investors in that financing is an extraordinarily important aspect of moving projects forward. Those investors need to know, as well as the entity that's paying the tax, what those tax liabilities will be, because their ability to generate revenue and profits from the activity are going to be impacted by the taxes that are paid. I'm a tax geek, forgive me. I talk code, I talk sections. I've been doing it for so long, I don't know that I can get out of that. Taxes are complex. I'm going to try to keep this at a high level with just the specific issues I've found in the clinical analysis. I'm not talking about policy circumstances here with this tax, it's just the clinical analysis of the tax. So I start first with how is this tax being created? How are we putting it together? And I find it in terms of the other projects that I've been involved in, and I've been involved in them forever here in the state. This one is a little bit rushed. It's targeted, and the way it's drafted, it can be volatile. There's been, by my count, about 15 attempts since 2019 to impose a PTE. But those attempts until this draft and this amendment 2 that was proposed, it's the first time that it's looking at an entity like Glen Farm. And the other items and the other times that the tax has been reviewed, we've been reviewed with other taxpayers in mind.
You can understand why somebody who believes that a S-Corp loophole tax figure, and this is complete nonsense. There's no loophole, right? But an S-Corp tax, corporate income tax applying to S-Corps, you can understand why someone who thinks that this is a good policy, but they can't get their bills passed. 15 attempts since 2019. I mean, that's some tenacity right there. Somebody really believes that we need to have this tax, and we've attempted to get it 15. We're at the point now where somebody believes, and this is primarily Wielechowski and Giesel, right? Senator Wielechowski, Senator Giesel are the main proponents of this. Maybe throw in Senator Hoffman. They're holding hostage the gas line to get this tax through, right? So 15 attempts since, basically 6 years. We can't get it through. We can't get it through. Now we're finally going to hold something that everybody wants hostage until we can get our thing. The majority doesn't want to do it, but we're going to hold it. So the question is always, how do you overcome the inertia to do nothing in the legislature, right? It's far easier for people to just be like, none of this really excites me. We're going to vote no, or we're not even going to vote, and we'll go home. It's all safer if we do nothing. We want to create a new tax. Oh, let's not have that conversation. We don't really need to. We want to cut spending. We want to have a conversation about a fiscal plan. Oh, we don't need any of it. We don't need any of that, right? This is overcoming the inertia to do nothing like some significant event is necessary to force that conversation in this legislature for a number of reasons. 15 attempts in the last 6 years, and now they finally have, the cards are right on the table, and they finally have this vehicle that has got people's attention, and they're going to hold it hostage until they can get their policy through. That's what's happening.
So when I look at this, I look at it in terms of Glen Farm as an organization and 8 Star and what we're trying to do in building this pipeline. And I find that there doesn't appear to be enough meaningful analysis of what this amendment is proposing. I look, Mr. Stickle and Mr. Stamus are coming up after me, I believe, to give a presentation. And I looked at one of the pages that they're offering, and it's page 15 of their presentation. And they call this concerns of pass-through provisions. And I go down that list, and their list and mine are almost identical as to what the concerns are. They're concerned about difficult and expensive for taxpayers to compute and understand the tax liability, unclear what the circumstances the department would be required, both ADHD, AGDC, and Glen Farm to file returns. That would go as well for investors. It's a relatively novel concept, they say, and there may be unintended consequences, which I agree, and unforeseen difficulties, potentially. One of the issues that's very important to this investment is they suggest that other than the public corporation, federally exempt entities like nonprofits are not exempt from this tax, meaning although it would have the entity pay the tax, that cost would be borne by the investors, which in this instance could be nonprofits. And think of the permanent fund. If the permanent fund invested in this project, they would have to, the project would pay a tax here, the entity, and then that would be less revenue that could go to the permanent fund. So when the permanent fund or any one of retirement funds throughout the United States, which are the investors that might be looking at this project, would look at this, they'd say, oh, right off the bat, we have a lesser return than we might otherwise have if we were an LLC in many other states. As a matter of fact, almost every other state. So those things are important in terms of our investors. We want to do what we can for our investors. And the amendment here is similar in structure to the prior bills, which again, didn't really consider one of those taxpayers could be the Glen Farm and the 8 Star entity. So this uncertainty in application chills, I believe it chills investor opportunities. So what I would suggest is clarity, continuous nature, and then allow our investors to understand their tax liability so they understand their investment. One thing that's I understood been discussed a number of times. Oh, how do I? Oh, whoops, sorry.
Use the arrow button on the screen. Use the arrow button and keep.
Oh, sorry. Forgive me, technologically not always competent here. Forgive me.
Quite all right. I think we're headed. We got there. Please continue.
So, as regards Amendment 2, this tax is unlike other states. If we look at all the states in the United States, there's about 37 that impose a PTE tax, but in almost every instance, that's an elective tax, meaning the taxpayer and the entity elect to be chosen to be taxed as a PTE, a single entity, rather than the owners themselves. A pass-through entity pass through the tax attributes to its owners. And so in most circumstances, and the reason we have pass-through entities is so that the owners themselves can pay the taxes wherever they reside. Alaska doesn't have a personal income tax. So if we had a person here who was elected to have the tax go to them, they wouldn't pay a state income tax. In other states, there are state personal income taxes. So that election of paying as the entity itself, the pass-through entity, or as the person is a little bit of a different question. Most of the time it's offered as an election because under the way personal income taxes for federal purposes are calculated, you actually have a benefit of paying at the entity level at 21% like a corporation instead of at a personal level at 38% as an individual. And then the state tax goes on top of that 38%. So relatively speaking, if I could deduct those taxes for my personal income taxes, that would be wonderful, but I can't. But if it's taken by the PTE, if the tax is paid by the PTE, that's less taxable money that's distributed to me at 38%. So in the end, I pay 21% tax instead of 38% tax. And most of the reasons why there is PTE taxes in the states is because of that. In fact, the state of California called their PTE tax the Small Business Relief Act. Even though it created a tax liability, it generated because it was a relief act. In fact, when I look at the states, there are only 4 states that have what we would call a mandatory PTE. That is, there will be a tax on the entity that is a pass-through entity as if it was a corporation. But those tax liabilities are relatively small. California is only 1.5%. The highest we could find is New Hampshire at 7.5%. But all the other states that have a pass-through tax are elective. You can decide to be taxed that way or not. One of the things that like with any tax, it's going to increase the burden. It's going to increase the burden on doing business here. But the burden we're concerned with, how much of the burden is a policy call on your part, not ours. But the burden we're concerned with is the uncertainty. It's measuring the burdens so that you know what you're going to have to pay. And that's a concern that we have with regard to this amendment. So if I go to the next slide.
Please continue.
One of the problems in the draft that we have here with this amendment is kind of shoehorning this PTE into our corporate income tax. We do so, and the draft specifically says that notwithstanding the Alaska section that incorporates the federal income tax code, we will move forward and tax this organization. So what we're saying is that for our corporate net income tax, we always start with federal taxable income. But the first thing we're going to do is ignore the statute in Alaska that incorporates all of the rules with regard to calculating federal taxable income, which is problematic only in that the very next sentence says we're going to treat it like a C-Corp. But it doesn't say how we're going to treat it like a C-Corp. It just says we're going to treat it like a C-Corp because we've already removed consideration of all of the rules that define a C-Corp federal taxable income. And it takes us to the sections in our law, which are apportionment. Apportionment basically just says if I do some business in one state and some business in another state, I'm not going to get taxed twice on the same business. I'm going to reflect and apportion the amount of tax in the amount of business in each state, and the tax will apply to the amount of business in that state. It's called apportionment, standard in state income taxes. But in our circumstance, our amendment goes back to those apportionment principles, which the very first statement in the apportionment principles is you start with federal taxable income to determine how to apportion the tax. But we don't have any. So in essence, what our amendment is saying is you create a pseudo or a pro forma federal income tax. And that is you create pro forma federal income, and then you tax it at the rate that we've decided we're going to tax in Alaska. It's difficult. There are no real rules. We're starting from scratch. We kind of don't want to create tax law, especially in regulation. Statutes should be clear enough that regulations only fill in the blanks, not create new sentences in the law.
So on that note, let me just share with you, because some people probably are not aware. There we go. So I got to make the bigger because you can't see it. This is the state statutes regarding taxes, income taxes. Persons subject to tax. Alaska net income tax, taxes on individuals repealed, tax on corporations, all this others repealed. There is imposed for each taxable year upon the entire taxable income of every corporation derived from sources within the state a tax imputed as follows. And here's your corporate income tax rate, okay? Written out in statute, very clear. If your taxable income is less than $25,000, you pay 0. If your tax is $25,000 but less than $49,000, you pay 2%. Okay, and that graduation goes all the way up to your top rate, which is a 9% tax rate for I'm sorry, 9.4 is the top. And you scroll down one more. So 9.4 is the top percent. If you're owning 222 or more, let me see here, plus 9% of taxable income over 198,000, 22,000 or more, 10,800 plus 9% of the taxable income over 22,000. So it's there's a flat 10,000 tax plus 9% of income over 22,000. Okay, so that's your corporate income tax rate. It's a progressive income tax. It goes from a 2% tax all the way to a 9.4% tax for corporations. And what this attorney is saying, what Mr. Mahoney is saying, is that you can't plug your pass-through entity, your S-Corp, neatly into the statutes that govern the corporate income tax for C corporations, for standard C corporations. This statute here is very clear about what a corporation has to pay. That was the other point that he was saying. You don't put it in regulation and make it complicated. You want to make it as simple as possible. This, pretty doggone simple. All right, let's go back.
So if we think about that in those terms, we have to, I would suggest, if we are going in this direction.
Good question, Frank. Who enforces that statute? You're talking about the tax statute, right? You write something in law, and then who's going to follow the law? Well, I can guarantee you that if corporations that are subject to that tax don't follow the law, they're going to be in trouble with the state of Alaska. And the ones that enforce it are Department of Revenue. That's their job. It's interesting that with regard to the legislature following appropriation laws, right? You put it into a statute that says, hey, the legislature is supposed to spend money in this particular way. You don't have to follow that law. But if a corporation, i.e. us, non-legislature, right? Private entities, corporations, individuals, if there was an income tax, if we don't spend our money that way and give the portion to the state, we're going to be in trouble because we have to follow that law. And that law is gospel. It is the law. You don't get away from it. The legislature puts a law in place that directs the legislature to do something, then it doesn't have to follow it. I mean, this doesn't make any sense. This doesn't make any sense. It's broken. This logic is broken. It is clear that the legislature could change the law, and that is the way that it should actually be applied. I think this is why the courts have got this all wrong. They're like, one legislature can't bind another legislature. You're absolutely right. You're absolutely right. But what Mr. Mahoney is talking about is the predictability of the tax statutes, right? The predictability that financial levers, the things that you put in statute regarding finances and what people can count on, the predictability is what's important, okay? Reduce as much confusion as possible. Well, the legislature is adding confusion every single year because it doesn't follow the statutes that it put in place for itself. And the courts, in their rulings, is being interpreted by the legislature as saying, oh, well, we don't have to follow the law. The courts just told us we didn't have to. And this is specifically with regard to the permanent fund earnings and the dividend payment. But it's also, there's a statutory appropriation for seniors. There's one for, there's one other one. It was on the tip of my tongue and I forgot it. Oh man. I'll have to come back to it. There's another one that's popular for the legislature to just not do anymore. Okay. The point that I'm trying to get to here is if the legislature has taken what the courts have said and run with the fact that they could just leave the statutes on the books and not deal with it, then the uncertainty that action creates in society is created by the legislature, right? If the legislature said, we don't want to do this policy anymore, then it should change the policy. And that's what the court should have said. The court should say, hey, look, if one legislature can't bind the other with regard to paying the dividend, So the legislature has the ability to change the statute. So if you don't want to do what the statute's saying, then you need to change the statute. But until you change the statute, that's the law of the land. That's what the legislature needs to do. They need to follow the law. It's healthy for society. That's why we put laws on the books, so that we can follow them. You don't put laws on the books and then not follow them. That doesn't make any sense. So the legislature ought to be looking at this in the sense of, yeah, we don't agree that we want to follow the PFD statute. So we need to change the statute to something that we are going to follow, because it makes the case for stability and people being able to predict better. It is congruous with the other statutes that we pass, like the one we just reviewed with regard to taxes, where nobody is questioning whether people should follow the tax law. Nobody questions that. The courts aren't questioning it. The legislature doesn't question it. The taxpayer doesn't question it. Everybody knows you got to follow that law. Well, what's the difference between that law and another law that tells the legislature how to spend money? There's no difference. There's no difference. It's just in the fact that the legislature is the one that creates the law and deletes the law or changes the law. So this concept that Mr. Mahoney is talking about with regard to predictability, I think is the one of the missing pieces in this legislature. They're not thinking in terms of what do our actions do to our system, to our state, to our culture, to other conversations and other implications around the state, where people are looking at the statute and they're like, well, the legislature doesn't follow it, so why do we? It creates doubt, and it's unhealthy. Legislature doesn't want to pay a dividend, then change the law. That's the way it should be.
That maybe we don't have this tax effective right away. We give people time to learn. We give regulations time to be established and so on, if we're going to go in make that policy call. For instance, something simple. Right now, there's a definition for taxable income. We're not starting with federal taxable. We're going to create one. And it includes industries that, one of the industries it says is carbon capture and carbon storage, which certainly if you're an oil company or you're in the oil business and you have those types of activities, okay, that's directly associated with the oil. It's directly associated with gas. It fits. But we also, in the state of Alaska, have companies exploring seaweed carbon storage. There are entities out there doing research and creating an entity that's actually going to try to put that in place. This law would start to tax, presumably, that company. An unintended circumstance, something we didn't expect. And when you have time and energies and you put that into a real review and understanding of an amendment like this, you would get those things certain, some are more certain. You can't, everything's not perfect, but it would become more certain. And that would be a suggestion. One of the things we get here too is we have what we call qualified entities, because they want to define what is a PTE entity that's going to be subject to tax. And in the statute, one of the qualified entities is a sole proprietorship. I'm confused. Sole proprietorship can't be an S-corporation under federal tax law. That's one of the PTEs. It can't be a partnership under federal tax law because there's only one. It's a sole. And a sole partnership in any dictionary is going to tell you it's a person who does business. But we don't have an individual income tax. So something like that needs to be clarified. How does that fit in? Where does it fit in? Because, and even a suggestion, one of the statements that's made in the state's presentation is that a sole proprietor, that's a question in relation to if it's a natural person. And the funny thing is, in the statute amendment itself, it says a natural person is not a taxable entity. But a sole proprietor is, but a natural person is not, but they're the same thing. Just clarification and clearing. But one question that arises in terms of certainty and understanding is, if we removed all the provisions from the federal tax code from this rule, this amendment, how do we get the deductions and credits that normal C corporations are permitted, any corporation doing business? At a minimum, we want to be on balance with all other states. It doesn't matter what the policy call is on charges and what the fees are, or what the tax rate is. But as to how you calculate income and how an investor understands what they're going to get back from their investments, it's very, very important that there is some form of conformity. Right now, I don't know what that is because I don't know what the federal rules are in Alaska. And as an investor, I'd be asking the company executives, tell me how I'm going to calculate this tax. How are you going to pay tax and what am I going to get at the end of the day after you've paid your tax? It's very difficult to do that with this amendment.
We were talking last night about poking people in the eyes,
Please continue.
poking senators in the
My
eyes.
last slide, but not my last statement, is I'll do a
Mr. Mahoney's good at that.
ambiguity, confusion, and risk in relation to our amendment. And I'm going to do an old Laurel and Hardy. Who's on first? So what I've drawn here is a very simplified version of who might be the investors in our LLC entity. And I don't care who the LLC entity is. Right now, we're talking about an LNG entity. There are three potential groups of investors. Those investors could be tax-exempt entities, the permanent fund, retirement funds throughout the nation. There's a whole bunch of nonprofits that have, non-exempt taxable entities that have money to invest, and they're looking for investments. Another would be natural persons, just people who invest. And then another is corporations. So we really have kind of three options here. Who would be our investors? Well, if I go to the far right, corporations, well, under our normal CIT, the corporate net income tax, if a corporation is an owner of an LLC, that LLC is already in part of the combination of the corporation that's subject to tax in the state of Alaska. So that arm right there is already taxable, no matter what we do with the LLC entity. Natural persons, well, if we're an Alaska person, we have no tax liability because there's no personal income tax. So the tax would flow to that person investing otherwise than in that entity would not be paying any state tax. And that's the law. That's what we've decided is going to be the way we're going to run the state. The third group, which is tax exempt entities, look at all of their investments in relation to return. They would look at this entity and say, wow, in this LLC, I'm going to get 9.4% less of the income returned to me because it's going to be taxed in the state of Alaska in the entity. However, I could invest in other activities or other investments, and that would not be the case because I'd invest in an LLC in some other state or some other jurisdiction, and the tax liability would flow through to me. And since I'm tax exempt, I'm not going to pay any tax. In our tax code, we have incorporated 501c3s. It's 509A is the code section, but exempt entities, and they are not subject to tax. But wait a minute, we already said, notwithstanding those provisions, we've removed them from the statutory framework in relation to this amendment. I go to section F in the amendment, and section F is a small section that says if a payment is made to an investor, that payment will reduce the amount of income that the entity reports. So there wouldn't be tax paid on that. My concern is that, I'll do a tax geek here, Senator Stedman, you might be with me on this one, but a payment is not income. A payment is a cash transfer or a distribution to someone. So in a normal sense, in a pass-through entity, I get a K1. It's a report from the pass-through entity to the investor that says, of all of the tax activity we have, this is your share. And one of those shares is business income. It's the very first box in a K1. Business income is not cash. Business income is the amount of revenue less those expenses you've been allowed. A lot of those expenses don't have any cash involved. Depreciation. Depreciation is an expense. It reduces your income, but there's no cash outlay. It just means something you paid for years ago has become less valuable from use. Well, now I'm going to have I'll pretend I have a lot of cash because in the debt service provisions of our financing arrangement, we're not going to have a lot of cash in the early years. But when I do have cash, I'll pass out a cash payment. But that had nothing to do with the amount of income that that individualist investor should have been allocated. So why am I reducing the income subject to tax for the payment? And I think that goes as poorly for the state as it does for the taxpayers, because there will be some years when there will be cash distributions to investors when there's little income in the company. And all of a sudden, you're going to reduce that income by the payments that's been made because of cash. I'm not saying there might not be a valid way to do that, but I don't think payments is the correct definition of the way to do that. For one of the subjects in terms of taxable entities is the manager. And it just is comma, manager. Well, I don't know what the physical end result of these project facilities are going to be, but I could foresee that you might hire, 8-Star or one of the entities that's investing might hire an outside manager that has nothing to do with ownership, has nothing to do with the gas that's passing through the plant, but would manage the plant on behalf of the gas owners. Is that person to be subject to this tax? Under the way we've defined taxable entities, they are going to be subject to this tax. Again, maybe an unintended result. Again, clarity is what I'm clinically looking at this amendment for. Clarity is what I hope and suggest that we have. That is the end of.
I in my mind's eye, I can hear I can hear certain legislators be like, "Oh, how dare they bring this guy forward?" Like, just the 10 minutes we've been listening or whatever, hearing him talk, is you can tell when somebody comes with authority and is speaking in authority because they know what they're talking about. Like, nobody at that committee is going to have an intelligent question that comes back to challenge his statements, right? Nobody. They don't have the courage. Like, they don't have the courage. They don't have the subject matter expertise or understanding of the tax law to be able to do it. Like, he is the man in the room that knows the most. And he's like, you guys have put an amendment together. It doesn't make a lick of sense. There's all sorts of problems with how you're doing this. It's great.
Slides.
Thank you, Mr. Mahoney. Committee discussion, Senator Stedman.
Thank you, Mr. Chairman. So what would be the recommendations to clean up the issue dealing with institutional investors, if it's pension plans or retirement plans from around the country that are obviously a potential for source of investment, to make it so we don't imbalance the playing field where they're forced to pay a tax if it's 9% or some other number relative to another project in California or Maine or New York or wherever.
Senator Stedman, through the chair. I might suggest that simply changing the wording from entity to taxpayer and then defining a taxpayer so that the LNG entity itself wouldn't pay the tax. It would flow through to each of the investors. So that would be the taxpayer. And you define the taxpayer as anyone who owns an interest in the LNG entity. Now, there's going to be a question. You're going to get a constitutional tax lawyer jump down and say, you have to have nexus, meaning an attachment to be taxable. We can put in the statute that if you own an LNG entity and define what that is, just as we have done, you have nexus in the state of Alaska if you're an owner. That would mean the natural persons, if we had a personal income tax, would be taxable. Corporations, you'd go through the standard C-Corp. The tax exempt entity would be transferred income, but since they're a tax exempt entity, they would not owe a tax. So one of the ways you might do that is to just redefine the entity as the taxpayer and have a taxpayer be any one of the owners.
Okay, and would that then take care of a person that happened to own a large company in Alaska?
We would have to do it definitionally. If that person had nexus in the state, they'd be subject to a personal income tax if we had one. If we did not, they would not. If their companies had nexus because of that, then the companies would become a corporation subject to the tax simply because they were an owner in the LNG entity. I'm not saying that would resolve every issue in relation to that step of entity's ownership. That might be one way to do it. The other way to do it might be to make it elective and have a certain restriction on how you can elect. So you can elect if, and that election might be if you have tax exempt entities as owners, if you have corporations as owners, and not have if you have natural persons as owners.
Senator,
You could put in there that if your last name begins with H, then you're taxed under this authority.
Stedman.
Yes, and if it's not, well, let's just lay it out so it's a lot simpler. Several years ago, BP was in play in the state, and they were one of the three major companies here, Exxon and Conoco and BP. BP sold out to Hillcorp, who's a LLC. So that took away a third of our income tax out of our oil basin. And the income tax was part of a 4-point balancing act we do when we calculate our government share. There's royalties and severance and property tax and corporate income tax. So that gap was created on that sale. And that's been a concern of some of my colleagues for years. And how do we rebalance that? Because when we work through the government sharing relationship, for those watching at home, that's a split of the oil profits and revenue. There's those 4 components that make up the state's share. And some folks feel that there's that imbalance. So this LLC tax would impact that if you were an owner of one of those companies. So what clarity do we need in this legislation if we were to clean it up to make sure we don't have any inadvertent issues that may arrive, like you're talking about imposing taxes on some nonprofits or what have you?
Senator Sedman through the chair.
Yes, Mr. Mahoney.
I might suggest that if that was the case, that as we have with our corporate net income tax, we've defined certain provisions to apply to oil companies differently than to non-oil companies. The corporate income tax applies to all corporations, but different corporations are treated differently based on their industry or practice. We could do the same with this when we define what a taxpayer is. So we could define the taxpayer to be the pass-through entity, and that it would be applied to those entities as they are described. One of the entities that could be a taxable entity is an entity that is in a certain business, if that's what we wanted to do. And so you'd avoid the LNG entity and therefore not impact the individual investors necessarily. But if the policy decision was that one type of investor needed to be impacted, we can do that. And we've shown that it's constitutional because we've done it with our corporate income tax directly.
Yeah, but it applies to
Yeah, so I think on this,
but it applies to all investors the way you've got it set up. These guys are just after Hillcorp. They just want one
amendment. The rate would be the highest in the country for states that don't have income tax. I think the other one's maybe 7% range or something like that, and this is a little over 9%. Is there, of course, it's kind of a policy question, a balancing range if, from your perspective, that you would recommend, not that we would take your recommendation, but what you'd recommend that the legislature look at if we were to consider imposing some form of a tax on LLCs.
Senator Sedman through the chair.
Significant sized companies dealing with oil and gas, LNG included, when I say gas.
Mr. Mahoney.
Understood. I think, again, we're looking at a circumstance where in the past, and forgive me, I cannot remember the legislation that allowed it, but we had a non-codified section of statute that basically directed the Department of Revenue to do an analysis specific to a legislative intent and request in regard to issues. And what I might suggest is we could have the department step back. However we deal with the amendment in the law today, one of the provisions might be for the department to do an analysis and review of the other states. There's a couple of methods you could look at. You could look at other states in relation to the size of their economy in relation to their tax rate. So For instance, California is a huge economy and their mandatory tax rate is 1.5%. Connecticut has the same thing. It's a smaller economy, but it's 6%. And maybe they do an analysis and determine in the size of an economy what a reasonable rate is for an investment, as investors would do when they're investing, and suggest a rate, a policy as to what an appropriate rate would be for this type of entity and this type of investment. That might be one way to do it. And that goes back to really one of my earlier statements was, to the extent an effective date is part of what we might do here, giving industry and giving investors time both to understand, to maybe get some regulations out, and to change the way they do business maybe, because taxpayers do that when the laws change. 3 or 4 years until this becomes effective would allow for a full analysis and understanding of what the best rate of tax might be. And also regulations, which would clarify and make certainty that's required, required by investors, and allow others to adjust the framework of their businesses. You may see people make very big changes in their business. Maybe this natural person becomes a C corporation because there are other benefits that the non-tax payment had outweighed before, but now if there's going to be a tax payment, that may no longer be the case and it'll fix itself.
So how does that change the calculus of people, investors, not people, investors who would be investing in this project, which is really what the legislature has to deal with, right? That's the thing that's before the legislature is, what is the tax policy going to be for this pipeline project, right? Is it going to be a property tax or are we going to go to the volumetric tax? Now, some other legislators have said, oh yeah, but let's think about this other tax over here. We need to make sure that there's a corporate income tax on HillCorp. And we can't get you to focus to do this bill separately. Oh, by the way, the third special session that was called by the governor, he's got 2 bills on it, 3001 and 3002, or maybe it's 3002 and 3, I forget. Anyway, one of them is a pass-through entity tax. He recognizes that the legislature needs to deal with the tax issue, but let's separate it from the gas line tax issue, right? But no, because the legislature refuses to have conversations about big things, about change, about fiscal plans, about taxation, about spending levels, because they refuse to have that conversation. Now you've got legislators who feel like they have to hold this hostage in order to have that conversation. That's what's happening. The uncertainty and the time that would be necessary for private entities, for taxpayers, to figure out what the implications are for their business when you go changing the statute here, means that there's this big question mark in all of the people who are participating with this project, or certain people, certain entities, certain potential taxpayers that would be participating with this project. So your actions here are adding uncertainty, which leads to greater risk that the project is not going to go forward. Okay. So you can say, I want a project, I want a pipeline, but your actions, if you're promoting this tax conversation at this time, your actions are saying otherwise. I want a pipeline, but we got to have this conversation that makes it less likely to have a pipeline. The two are incompatible. This is the wrong vehicle, the wrong time to be having the conversation about this particular tax, because of the uncertainty and the things that need to be, that the time that would be necessary for business to figure it out, right? And figure out what it all means. We don't have that time. The project needs to move forward. Glenn Farnes communicated that. Consultants have communicated that. We've got a window of time here that we need to be able to operate. And what the question before the legislature is, are you going to continue to try to tax the pipeline with a property tax at 20 mils? Or will you accept a volumetric tax at a 2 mil rate? Because we think that would make this project economical. Say no to that, and then all of this other stuff is irrelevant. You're not going to have a pipeline. You may have a tax, a corporate income tax that affects S-Corps, but you won't have a pipeline. Some people, that's what they want. They don't care about the pipeline. They don't really care about the pipeline. Maybe they're a Democrat and belong to the philosophy that the Democrat Party has put in their planks, the platform that says, we want to pause all of LNG exports because the earth is dying and we've got global warming, blah, 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 right? Maybe that's your bent, your political narrative. Well, here it is. All you need to do is pass the corporate income tax for S-Corps and kill the pipeline, and you've just done exactly what the Democrats want to have in the state of Alaska. More taxes, no pipeline. Perfect. How can we just make that happen, Republicans? 5 Republicans in the Senate who are empowering the minority Democrats. How can we make that happen? Senator Stedman? Let's bring in a tax expert here to help us figure out how we can do this. Makes sense. Let's find an agreement here. We'll call it bipartisanship. We don't even know what we're doing. Like, you're going to take actions that are going to jeopardize the pipeline. That's the point that Mr. Mahoney is bringing. Not, can you help us solve this problem and so we can create a tax?
Follow up, Senator Stedman.
Just a clarity question, and you already answered. I just want to make sure, because none of us are tax lawyers. We don't have one in the building, or under our employ. So if you're a C corporation, you can't do an LLC and avoid the tax. Is that correct?
Senator Stedman.
In a non-tax environment, in the state of Alaska that has no income tax.
In the state of Alaska, the corporate statutes apply first. So if you have a corporation, period, you are subject to the corporate net income tax. You want to play games with underneath you with different entities, with different structures, doesn't make a difference. You go up the chain of entities as far as you need until you find a corporation. And if that's the case, you apportion activity to the state, and that apportioned activity is taxable.
Senator Stedman.
Mr. Chairman, I think that was been one of the concerns that many of my colleagues have had over the years, that other or companies, C Corps within the oil patch would change their structure, thereby avoiding the tax because we have no income tax. So that helps with the clarity on the issue quite a bit, actually. It can't be done.
Senator Stedman, through the chair, I would agree with you. I think it would be extraordinarily, unbelievably difficult to do. Never say never.
Thank you, Mr. Mahoney. Additional committee discussion. Senator Kronk.
Oh, thank you, Chair Shruggy. I guess I'm a little frustrated. I'll probably not make people happy here, but we had a bill sitting here all session about this tax, and in my mind, it was not passable through both bodies, so it was not moved. But now we're trying to actually put this in a clean gas line bill to move a gas line forward, and it's really frustrating to people. I'm thankful we have this out in the public. We're doing this out in the public, but it's really frustrating to see that. I mean, those are the facts. This bill wasn't, that S-Corp tax wasn't going to pass, maybe pass one's body, but it's not going to pass the other body. But yet we're trying to negotiate and put forward a clean gas line bill that could possibly build a gas line for us. And yet we're trying to put a tax in this bill to stymie the waters of having a clean gas line bill that, you know, I know there's a lot of Alaskans looking forward to having a gas line built and providing that energy for Alaska. So I just want to put that on the record for being very frustrated. I think we do a good job of keeping things clean, and this is major. It's not clean. It's real dirty.
I thank you, Senator Kronk, for bringing that forward. It's like you were reading my mind. This is 100% a minority, 100% a minority number of legislators who are senators holding hostage the gas line bill in order to get this corporate income tax applying to S-Corps bill concept amendment stuffed into this pipeline. They are 100% taking advantage of the fact that there's a lot of people that want to see this bill passed, and they're going to hold it hostage until they can get their bill in. That's what is happening. 100%. Senator Crunk's 100% right on this. Sad.
Thank you, Senator Cronk. Speaker Edgman.
Fascinating discussion, and I appreciate you being here, Mr. Mahoney, and thank you for your expertise and your, I think you're pretty direct counsel. A lot of things are going through my mind right now, and to Senator Cronk and the bill that was before the body, all due respect, a bill like that will never pass because it's a tax and there's directed opposition to it in every form along the way. And that bill has been around for a number of years, and it's not been able to get traction for a whole bevy of reasons. And I'm a little frustrated because I just counted here. We got this bill 99 days ago. 99 days ago, the bill that we have before the body now in special session number 2. And what I'm hearing is the issue is technical in nature. It's about certainty. It's about application. It's about complexity in terms of the pass-through impacts and administering the tax and thereabouts. I guess I'm not hearing that there's opposition to the underlying tax itself if it were properly constructed. I have to imagine there is stark opposition to the underlying tax, no matter how we construct it. I just have to imagine that because the developer here, who, you know, with great respect, is taking this gas line project a lot further than anybody ever has since the first drop of oil came through the pipeline in 1977. It's their fiduciary duty, probably, to oppose this. And so I'm not sure what to make of this discussion. I could understand the technical confusion here, and I think your remarks were highly cogent. But you know, I feel like we're here representing the state of Alaska, and I know I'm not speaking.
You're speaking the truth. You're speaking the truth. You're cogent. Your argument is cogent. You're speaking the truth, but I don't want to hear the truth. Like the truth is coming from the developer. The truth is coming from the developer, and the developer's biased because they've got a fiduciary responsibility to avoid taxes. So don't speak the truth. We shouldn't. I don't know what to make of the truth. If somebody else was speaking the truth, like inside the legislature, well, then maybe we could listen to it. We'd know what to make of it. But because you're speaking the truth, I don't know what to make of it. We have a problem with the truth. That's what we have a problem with. Yeah, people are going to oppose it. They're going to oppose it because it's a bad idea, and they're going to oppose it because it's written poorly. That doesn't change the fact that it's holding up the gas line. You don't know what to think about that?
For or against an S-Corp tax provision in the bill. But I know, having been through this discussion for how many of these, 99 days, which some of those days were exclusively devoted to this one topic, that there are a number of legislators who are watching these discussions, some who are adamantly opposed to any version of this being in the bill, others who are saying we cannot support the bill unless there's something in the bill itself. I'm in the camp where I want to make this thing go. I want to get to an agreement. I want to have something that sort of connects all those polar opposites on the on the concentric circles that define all this. But I'm also here to represent, speaking of fiduciary responsibility, the state of Alaska. And I look at the supposed profit numbers later on, in the life cycle between now and 2062, and there's going to be enormous profit being derived from this project to the developers who, ostensibly, certainly, they've taken all the rest. They deserve to be rewarded for their involvement, if you will. But what I want to...
Mr. Mahoney's an invited guest to testify. What is Representative Edgman saying to this invited guest? Like, what is the point? Is he speaking to the rest of the committee? Is he speaking to the invited guests? You've presented truth to us, but we can't do anything with it.
Bring all this back to my point is the opposition to this more technical in nature in terms of the construction of the way it's being presented, or is it because there's just opposition from every level, whether or not we were, if we were to hire you, Mr. Mahoney, and have you be our consultant on this side of the table, would you put something together for us? Would that work or not? So I guess I'm a little frustrated because I would really have appreciated a more deliberative sort of discussion on this element, and in deference to what Senator Cronk was saying, maybe we could take more time to look at this thing and find out from a pass-through entity standpoint, this is just not a good thing to do. And the other thing, and we have a representative from the Department of Revenue coming forward, I sit here and I wonder, why wasn't this analysis done with other states? 99 days later, why, in behalf of Alaska's interests, did we not do the benefits? Because when I see these numbers, Alaska's PT proposed rate of 9.4% essentially tower over what other states that have non-elective taxes. To Senator Stedman's point, they've got a whole plethora of taxes that probably make this 9.4% look pretty damn attractive, So I'm sitting here a little frustrated too, maybe for different reasons than my colleagues here, because, there's a sense of being flat-footed here, right? And being caught in between countervailing forces that we just don't have the time to really sort of dig into it. So.
Let me remind you that this is the Speaker of the House. One half of the legislature, he sets the calendar, he sets the tone, he sets the time. he is responsible for the sequence of events that happen in the House of Representatives. And he is arguing we just don't have the time. And why hasn't this information been brought to us? And why didn't we think about this sooner? We've only had this for 99 days. Like, if it's not you and the people who are your leaders in the body who are responsible for answering those questions, it's certainly not the guy sitting at the table doing the testimony. Like, you're the one that's responsible for it. You're in charge. There's nothing else that can be said. You literally are the one responsible for making sure that this stuff happens. Nobody's higher than you. You're it, Mr. Speaker. Yes, there are others in the legislature who have authorities and exercise power, and there's distribution across them. But you're the Speaker. You're the one that's supposed to be coordinating all of this and making it happen in that branch or that house. Such nonsense.
So, a little bit of a rant there, Mr. Chairman, and I guess I'll circle back for a third time to either Mr. Prestige or Mr. Mahoney. Is this about opposition to the tax itself, or is this about the need to fix it?
I think that's a question probably for Mr. Prestige.
Thank you, Representative Edgman, through the chair. Last week, Glenfarne put out a public statement articulating our views and our oppositions to the tax. I think first and foremost, as Steve has said, Mr. Mahoney has said, we agree that certainty is a core driving principle for infrastructure development, infrastructure investment, and the presentation today has walked through some of the uncertainties that this creates, and so that's certainly part of the opposition. The second point of opposition does go to the state comparison, to comparing Alaska as a state and a place where investors can decide to do business or not. With the Alaska LNG project, a $54 billion project, Alaska is on the verge of one of the largest investment attraction capital formation opportunities that any state has ever had. And so undertaking that opportunity and that capital formation event, and also layering in a tax regime that is uniquely higher than other states is incongruous and would really be defeating some of the incredible opportunity for growth that the state has in front of it. Senator Stedman did ask Mr. Mahoney, some of the ways that could be ameliorated, and Mr. Mahoney walked through some of those. But again, those are the kind of two primary points of opposition for Glen Farm.
Thank you, Mr. Prestidge. Representative Ruffridge and Senator Stedman after.
Thank you, Chair Schrage. And well, Mr. Mahoney, thank you for being here today. I believe that you have received potentially 2 job offers already by sitting here. I'm not putting words in Senator Stedman's mouth, but I think that was a job offer, certainly from Speaker Edgman. I think Speaker Edgman was speaking about complexity, and I want to ask a very simple question first, which is, I get this distinct sense that one of the concerns that you have about specifically Amendment 2 is that the language of the amendment is just not ready for prime time. Is that an accurate description of the language of the amendment in this bill?
Mr. Mahoney?
Representative Ruffridge, I think that's a valid way to state it. It's not ready for prime time.
Representative Ruffridge?
Thank you, Chair Schrage. And I think that in the interest of sort of taking the priority list or triaging, as we do in healthcare, the things in the value level, I think the first thing that we should, have as a take home is that we started this process talking about property tax abatement and how that would potentially bring a project to fruition, a project that has a lot of upside in the form of revenue if it comes forward to the end. I guess, Mr. Mahoney, this is just going to ask you to guess here, but you mentioned and adapting, I think is the correct word, that companies would do if there was a different type of tax put forward. I feel like I've seen it in my own personal business life. People find ways to not pay taxes. And there's a lot of different ways to either invest dollars, make payments to other things. In your opinion, and I'm going to ask the same question of the Department of Revenue, is the way that this tax structured just a boon for revenue to the state of Alaska?
Mr. Mahoney?
Representative Ruffridge, through the chair. Boy, that's a tough one. I have been in numerous circumstances in the past where with taxpayers we have created, removed, dissolved, changed, amended, or done business differently to have a different tax liability. I've spent my entire career refining and defining to taxpayers that their requirement was to do the right thing and pay the taxes that are appropriate. There are ways to change your tax liability perfectly legitimately with due analysis and balancing the issues involved in the change. If I were looking at this bill and it were becoming something that was going to be part of our law, I might be going to my clients and saying, we could change the way we're doing business or our structures and maybe be impacted in a different way than this law. As to whether or not it's just boon dollars, I'm not sure how to answer that. It would likely generate revenue. I don't know how much from Glen Farm in the near term, given debt service and the other expenses involved in activity, but I believe that to be the case.
Thank you. One
Follow-up
question.
Follow-up,
Thank you.
Representative Ruffridge.
And this is, I think, to Mr. Prestidge. And I think maybe Speaker Edgman was asking this question in the sense of, are you opposed to the tax as just a general rule, or is it the elements of it? And I think for me, it seems like it's both. But I wanted to ask what your assessment is of the viability of the project if something like this were to move forward. I sit here and I think the number one way that we can ensure that we're maximizing benefit to Alaskans and ensure that we have some sort of high-level revenue coming to the state is to maximize our resource development. I think that's seems clear. We've heard over and over that this project, I think, brings not only revenue to communities that are not on the pipeline path, but also revenue to the state and in many cases, a lot of revenue. What is your position as a company about this specific type of language making the project itself more difficult?
Sure. Mr. Prestige?
Thank you, Representative Ruffridge, through the chair. I will refer to the diagram where we have LNG entity LLC, and you can take that as this project or any other project finance infrastructure project. And so taking a step back, the Alaska LNG project is different from producers on the North Slope. It's different from, it is a project finance entity. And so what that means is there is not a single corporate shareholder, or once the project is in construction and is in operations, there won't be one single corporate shareholder that owns the entire project. The project will instead be funded through outside lenders coming into the box below, the LNG entity LLC, and then investors coming into that box below. And so that becomes what's called your project finance vehicle. And that's become an extremely standard way of financing projects like this. From a project perspective, I appreciate your point. We've done a lot of things over the course of deliberation on this tax arrangement to reduce the tax burden on the project. Putting this pass-through entity tax in the place where it would assign the pass-through entity tax of 9% at the LNG LLC level would be a unique burden on any project finance vehicle. Typically, a project finance vehicle is set up as a pass-through entity, and the upstairs shareholders pay tax on that because so that they can all invest under their different arrangements. And the LNG entity LLC is evaluated on a pre-tax basis without taking into consideration the loss of 9% at that level. Individual investors can all make their own decisions based on the tax liability that they would have. In summary, my point is putting the project entity tax or the pass-through entity tax on the project entity level would put a unique burden on this project that conceptually would offset or decrease a lot of the benefits that we've talked about here with the alternative volumetric tax.
Thank you.
Senator Stedman.
Thank you, Mr. Chairman. I got a little different view. So here we sit today, we've got a loss in BP, they're gone. So we've got an impact on our split, and to Hillcorp's credit, they've increased the production and increased it substantially. So it's not a clear-cut debate on that issue in any means, and we're looking at that. We also have a constitutional blockage of commitment to freezing taxes. We can't do that. So I'm not so sure it would be fair to the investors with the momentum being built in the state to put billions of dollars on the table on equity and have tens of billions in debt and have us change the tax structure midstream. The day they open the liquefaction plant, we convene the legislature and decide to put a tax on it. Game's over, they can't do anything about it, right? So I think that we should give this some consideration for stability's sake. So they know that we have a system in place that they can count on for 30 years or 20 years or whatever, a significant amount of time. But when I look at the LNG project here, we've been spending more time on just the pipe, but it looks like there wouldn't be any taxable income because of the depreciation shield and operating losses for years, loss carry forwards, like maybe up to 2 decades. How how the full project looks. We don't know. We haven't, talked about it much. And we certainly haven't been privy to a cash flow model. But it appears that it's a decade to 2 decades out before there'd be taxable income on the in-state gas line. That's what we build, and that's all we build. But I'm not so sure it's fair to the investors, because there is a mood and concern in the state on this, the significance of the assets that we have, resource that we have that we're selling, that we shouldn't have that discussion in a structure. And I'm not advocating for the 9%. I have no idea what the number is. That looks a little high. And I recognize and would agree that some delayed date for working out details, so we have something that works and investors have time to restructure for their own personal needs. But I don't think it would be fair to, put $55-60 billion project in play, and then day they turn it on, we reconvene and decide we're going to put a little revenue generator on it, because that's just not fair.
Senator Stedman, through the chair. I mean, that is one of the issues involved in any form of change, and the ability and the timing to allow taxpayers to incorporate what's being considered and incorporate the policy as to what's being averred. That's why, again, I would suggest that we give some time in implementation. Maybe we go, 4 years from today or 4 years from the end of the year, it's going to be in place as far as tax in the state is concerned. That provides everybody a time frame within which they can be comfortable, understand, make investments decisions, or adapt as they might in their corporate activities.
Thank you, Mr. Mahoney. I think we've had a good committee discussion. Is there follow-up, Senator Stedman?
No, but I think that's a serious issue that, if you've got $60 billion project, people want stability and predictability. And if we're going to do something, we need to let them know early, not later. And not, I would say, not price ourselves out of the investment game. That would be just downright stupid. We got to stay competitive.
Thank you, Senator Stedman. Senator Kronk.
Thank you, Chair Shruggy. Since this is brought up, I wanted to bring it up. I've been actually thinking about this a lot, because we use the term maximum benefit. You hear that all the time. And I just want to read something. It says maximum benefit means the state must manage its natural resources for the long-term good of all the people. And there's a term, and I did AI this, I'm going to give that, credit, but it does say just beyond the cash. Maximum benefit does not simply mean making the most money or collecting the highest taxes. It means providing citizens with maximum access, use, and long-term prosperity. And in this case, what we're looking at is long-term, low-cost energy for the state, as well as long-term revenue that we're bringing. So I just wanted to highlight that, because I'm having trouble with that, because if we look at our logging industry, especially in the interior, our stumpage rates aren't that high. We're not bringing that much revenue into the state. But the benefit of that is we have companies providing employment for people. They're bringing logs in, they're doing value added to that. And then the stumpage rates will keep access roads open, so people can go hunt and fish, trap, have access to that. That is also maximum benefit to the people. So I think we have to step back, and we honestly, we have not solved our energy issues. This has been a long time coming, and for me, this project is one of those things that not only solves the long-term energy project, it does bring in revenue, it creates jobs and services across a lot of our communities that we're desperately desiring right now, because we're watching people leave. So just wanted to add that. Thank you.
Thank you, Senator Kronk.
Mr. Chairman?
Speaker Edgman. Sorry, Senator Stedman, were you hoping to jump in there?
Yeah, just real quick. I don't know. I've never met anybody that wanted to pay taxes yet. So if anybody wants to pay, just raise your hand.
Speaker Edgman.
I do. No, not true. Yeah, just as a concluding comment, thank you, Mr. Chairman, and everyone around the table, and certainly people at the far end of the table for this discussion, because I think it's been very fruitful. And Mr. Mahoney, I like that you shed light on the complexity of the, the ownership sort of profile of this project, as Mr. Prestige also underscored, that this is going to be quite unique, very different than in 2014 when we were here contemplating a project with three majors who had the balance sheets to do this on their own and not have to have, all this pass-through activity taking place, whether it be the corporate income tax or whatever it might be. But you can't help but just sit here and think that this is a multi-dimensional issue that we just simply don't have the multi-dimensional time to get into. And I completely support the comment by Senator Stedman that, and that aligns with your comments as well, Mr. Mahoney, about certainty and about stability and about a state that, is going to be seeking revenue in ways that we perhaps can't imagine in the 34th legislature, but in the 36th or the 37th or the 40th legislature, is the highest cost state environment in the state. We're seeing a state not able to pay for its basic services. So anyway, being able to put something that's modest in place, that's fair, if I could use that term, at the initial part of this project that makes this thing come to fruition, gets this thing up and going. To every the comments around the table that this is a a transformative project that doesn't need to be restated, but here we are, and I don't know if we have the time or the tools to even give this a fair go at this point, and of course that leads in the political mess that this whole thing kind of sits in right now.
Thank you for those comments, Speaker Edgmond. Representative Ruffridge.
Yeah, thank you, Chair Schrage. So, Mr. Mahoney, you said that there's been approximately 15 attempts to impose a pass-through entity tax in the state of Alaska. Wouldn't you say that at the moment we're actually probably not classified as a stable environment?
Mr. Mahoney?
Representative Ruffridge, to the chair. That has been a commentary for some time. One of the benefits of social media is the ability to have information immediately. One of the strange parts about social media is I understand that all of the investors in this project may actually be watching me talk right now. And they're listening to you. They're listening to what's happening today on the ground in Juneau, and it makes a difference in their decision-making. I would suggest that the more we go back and forth and relish and not necessarily argue, but disagree, and the more uncertainty is involved.
Mr. Chair, thank you. I really appreciate.
I think that is probably one of the most pertinent conversations or most pertinent statements that we've heard from this committee, from anything, any conversation that's happened on this gas line, is that there are people that are watching and they're questioning whether you want to actually do business in Alaska. Are these people actually trustworthy? But let me just throw this out here for a second. Doing business in other countries that we would recognize as third world countries. I don't know. I can't even pick one off the top of my head. Zimbabwe or something, right? Some country in Africa, some over in Indonesia or wherever, right? The majors are doing oil and gas development all over the world. Okay. A regime that you have to come in with bribes is predictable because all it's going to take is some money and you're going to get the result that you want. The question is how much money? This is unpredictable. Again, we're fighting over money, but the concept, the structure, the process, the how do you go about it, the predictability of it, it's worse. It's worse than if you were just in a regime where you just pay off the warlord and you're done. Maybe you have to pay him off again. Okay, you're done. You don't have to worry about there's other negatives for having to deal with warlords, right? I'm kind of being a little bit of sarcasm here, right? But in some respects, it's far easier to deal with that type of a problem than it is a legislature that doesn't even know its own mind, that doesn't prioritize private development, entrepreneurial development. It's obviously not caring about it. It cares more about the taxation piece of it than it does in supporting and promoting economic activity. It's bizarre. You got one subject matter expert here that's like, you know what? I need to be careful answering that specific question. You asked me if this is an unstable environment. I know my investors are watching. So if I say yes and agree with you that this is an unstable environment, they're going to use that against me when I come to talk to them about, hey, you want to invest in the project? Oh, but you said this was an unstable environment. Man, how stupid can you be? Why would you say that? It just shows you that the people sitting at this table don't care. They're not even thinking about what is necessary for economic activity, for business to happen. They care less. They care less. Stupid mosquito. A threat here in Alaska. All right. Let's finish this up.
Appreciate that answer, because I think it speaks to the opportunity for us to instill some stability in the idea of choosing an opportunity that's sitting in front of us, particularly an opportunity, as Speaker Edgman so eloquently put it, for revenue for our state, and not in the form of some sort of pass-through tax. I'm wondering, Mr. Prestage, if you could remind us of what the estimate is in state revenue should this project find its way to phase 2 at full operation.
Representative Rutherford, to the chair, my recollection of Department of Revenue calculations is that in full operations, the project produces approximately $800 million a year in various revenue streams to the state.
Thank you, Mr. Prestage. And one follow-up, if I may, Mr. Chair.
Follow-up, Representative Rutherford.
Thank you. And I think, Mr. Mahoney, you said, I think very clearly that the opportunity in front of us is to pick a lane and get in it. It seems like to me, and it sounds like you've watched this often, what do you feel like has been the barrier? What has been the thing that has stopped the legislature from implementing a pass-through entity tax in all the attempts that it has gone through in this body?
Representative Rutherford, through the chair. Beyond the fact that I think there is confusion as to what exactly the law would do, and I think that's repeated confusion, as much as I believe the department has worked hard to try to make it to the best of their ability into something that is manageable and reasonable, I think we haven't gotten there yet. And I think what really needs to happen is, if we want to do this, a stated focus over a period of time where we hash the whole thing out. Having done some research, understanding what other states do, understanding how investors feel, even to the extent where we might ask some investors. Talking to technical, clinical people is fine to discern what the bill says, but what it does, sometimes you have to ask the taxpayer. And those taxpayers are the investors in a situation like this. It's not easy like it used to be. Exxon, BP, and the gang puts up their funds and they do what they want to do. We're in a different world. And that really changes the way we should be looking at this.
Thank you.
That's this guy, he needs to come back to the legislature. Senator Stedman is still stuck in BP Exxon land 2 decades ago. He's still stuck there. That's the extent of his experience. Like, those were his formative years. But he's not even keeping up with times. Like, Glenfarne comes in and it's a new company, new paradigm, new way of doing things. Nah, we need to find a different company. We don't need to deal with these guys. They don't know what they're talking about. I've dealt with BP and Exxon. They're big players, and we know what we're dealing. We know what we're doing here. No, you don't. No, you don't. This very process is killing the opportunity for a pipeline. The very process that you're engaging in, Senator Stedman, Representative Edgman. this very process. We look back on it with a failed attempt to get a pipeline. You can point to the fact that you're having the conversation as the reason why investors decided not to go forward, why the project ended up failing. That's the reason why.
Thank you. Senator Cronk.
Sorry, I wasn't going to talk again. Thank you, Chair Shrug. I just have to go back after, again, we've had lots of meetings, and I really go back and reference Mr. Sims from NSTAR and his stressing the importance of having this ability to have this gas sooner than later. I've got people in Fairbanks screaming right now. I don't know if people seen the energy, not that rural Alaska, we already know those energy costs, but for people in Fairbanks, screaming right now. And part of that is because South Central couldn't generate enough electricity to share that with Fairbanks. So we have to kick on our diesel generators. And so the kilowatt hour is 34 cents a kilowatt, right? I think what this project brings to the state, which we really haven't had a lot of, is hope, right? People are hoping. We know this isn't happening tomorrow, but you put something in play that gives people hope, because people in the interior are I just don't see how people are going to continue staying there. The costs have risen so much there, along with high mortgage, obviously costs. So I think in a way we have to figure something out. We have to give our people across this whole state, because we know we have issues all across with high energy costs. We got to give them some hope, right? I mean, windmills and solar panels are not hope. That's not the answer for long-term energy solutions. So I just want to leave that out there. It's like, it's our job to make sure that people moving forward in our state have hope. They know we're doing the right thing, and actually giving a developer the opportunity to do this. I don't think there's any guarantees this happens, but we can give them that opportunity to say, can this be successful?
Thank you, Senator Cronk. Appreciate the discussion from committee members. We were next slated to hear from legislative finance on local contribution, but we'll take a brief at ease as we switch presentations over and have a quick
All right. So there we have it for tonight. That is the extent of the conversation with Mr. Mahoney, and conversation about what it means for pass-through taxes or pass-through entity taxes for the state of Alaska, what the corporate income tax is for the state of Alaska, why that's irrelevant, largely irrelevant for what the legislature has been asked to focus on, which is a pipeline tax regime, property tax, all alternate volumetric tax. And somebody thinks that they need to throw in a corporate income tax for S-Corps, for LLCs, pass-through entities. They couldn't get the bill passed in the regular session, couldn't get it passed in a first special session. They haven't been able to get it passed for years. And now they're holding the pipeline bill and the pipeline hostage, which really honestly means, and Alaskans can see this, right? If you're jeopardizing the possibility that we could have a pipeline, then who you're really holding hostage is Alaskans. You're saying that I believe so strongly that Alaska needs to have a pass-through entity tax, that Hillcorp has to be taxed, and they have to be taxed this year, that I'm willing to jeopardize the possibility of building a pipeline to get that tax. Meaning it is far more important that we get a Hillcorp tax than it is a pipeline built. That's the priority that Senator Wielechowski, Senator Giesel, Senator Dunbar, other Democrats in the Senate, that's their priority right now. We're willing to jeopardize, we're willing to take the chance that this pipeline doesn't happen in order to get this bill or this amendment and this concept, this tax on S-Corps, get that implemented into the state. And if the pipeline dies, it dies. We're okay with that. Lots of Alaskans stand to lose immensely. And who stands to gain if they get their way? Who stands to gain? State government stands to gain. people who are tied to state spending stand to gain. And how much is it? A couple $100 million? What's Hillcorp going to be paying in taxes? I don't even remember. I mean, I haven't taken it that seriously. A couple $100 million? Let's say they're going to pay $500 million. Okay. That doesn't even fill our budget deficit. The project's going to cost forward $800 million in taxes if you get the pipeline built, plus low cost. I mean, you can't even compare it. It's not even comparable on benefits for having this pass-through tax versus having a pipeline. I mean, we're literally saying $800 million is not enough. And this just points to the underlying foundation of these Alaskans who greed is driving their MO here. I'm willing to kill the pipeline to get my way with my Hillcorp tax. We've been trying to do this for years. This is like attempt number 16, and we finally found a way that we can get our way. We'll hold Alaskans hostage, and we'll jeopardize having a pipeline built that has some hope of lowering the cost of energy. And we'll jeopardize that so that we can get our way on a corporate tax. That's where we're at. There are 9 Democrats out of 20 in the Senate, and they're holding this up. The reason that they're able to do that right now, the reason they're able is you've got 5 Republicans who put them in the majority in the Senate. Senator Merrick, Senator Bjorkman, Senator Stedman, Senator Giesel. I forget one. They're the ones that are responsible for this conversation right now. You can place the blame squarely on their demand and their insistence on trying to get a defined benefits bill passed is what has led us to today. It's all about government control and all about government spending. That's what they care about. Now, Alaskans are the ones going to pay the cost. They're going to pay the price. So my understanding is that potentially there's a CS, some kind of CS committee substitute being drafted right now that may come forward tomorrow, may not. Legislature is scheduled to come back in session on the 1st. So possibly we'll see something. We'll see. Anyway, thanks for joining us tonight. Let me check your messages here. Thanks. There's a lot of questions, a lot of comments here. So it is possible that this is all organization for next year. That's what Lynn's saying. I have a sneaking suspicion that since Representative Edgman is running for the Senate, that he is showcasing his concerns, showcasing his ability to be part of the team, maybe angling for a job, whatever. It's a possibility. Can never take politics out of the politics. Yeah, and this is. We are in uncharted territory as far as I'm concerned. Representative McCabe brings up a great point. I talked about this the other night. This dang mosquito. Conference committee has no power to draft a CS. The conference committee has no power. The current conference committee has no power to amend the bill per our rules. They can select, and when I say amend, offer amendments and change the language of the bills other than selecting a House version or a Senate version. That's what they have the power to do. Now, I think there's probably one or more legislative legal opinions on what the actual power of the committee is to change the language in the bill based on precedent that was set in previous conference committees. I suspect that is the case, okay? But per the uniform rules, the conference committee gets to choose versions of the bill that are in opposition, that they can't find agreement on. Okay, that's the stage we're at. If they want to actually amend the bill, then they have to go to what's called a free conference committee. They have to establish a new committee. The members of this committee are ineligible for serving on that next committee. And that is the only way that the committee, by our rules, by the legislative rules, can actually amend the bill. Okay. So if there's CS that they're going to bring in, which is basically just another way to say, this is the section that we selected from the Senate, and this is the section we selected from the House, and now we're demonstrating what we found agreement on. If that's all the CS is, then okay, now they found agreement on versions of the bill. But if they're bringing in a CS that's got additions to it, then what is actually listed in either of the two versions, then they are outside the rules. They're outside of the process that's been established for checks and balances within the legislature. If that includes a corporate tax, then I would fully expect somebody to sue on that behalf, against that argument, is that this is an illegitimate process. It's an illegitimate bill. They didn't even follow their own processes for creating the legislation that created the tax. They didn't have the authority to amend the bill. They didn't have that authority, if that's what they end up doing. Now, you want to go to a free conference committee, then you've got the authority. You want to go to the legislature and ask the legislature to waive their rules so these rules don't apply and these people can do whatever they want to do. You want to do that? Well, then the legislature can waive their rules and they do whatever they want to do. But we haven't had that conversation. I don't know, but I suspect there's going to be some members of the legislature that aren't interested in waiving their rules. They don't want to see this amended the way that I think Senator Stedman and others are going to try to amend it. As Senator Cronk pointed out, we have the opportunity for a clean bill. The version that came out of the House is something that the project said that they could live with. The governor said that he could live with. It's right there staring him in the face. Rubber meets the road. It is the Senate who is going to kill this bill. They're going to kill the pipeline, and they're going to do it because there aren't enough votes to get a corporate income tax on Hillcorp. The benefit of the pipeline far outweighs any benefit that you're going to get from a tax on Hillcorp. Financially, energy. If this conference committee doesn't have the power to do what it's going to do, don't be surprised if somebody sues with whatever the outcome is and says, look, courts, you've got to rule this ineligible. It's illegitimate because they didn't even follow their own rules for creating it. It's tyranny. Just do whatever we want. Yeah, this is exactly the point. Who are you going to replace him with? You imagine if somebody like Representative Edgman, who's sitting on the committee, and now he's forced to get off the committee. Does he appoint somebody out of spite? He's like, fine, I'll just tank the whole thing, and I'll send somebody that's never going to be able to make it happen, right? I mean, just there's a reason why Representative Edgman is sitting there and not one of the other co-chairs of finance. Who are the other co-chairs? Representative Foster from Nome, Representative Josephson from Anchorage. Look at it from the Senate members of the conference committee. Senator Stedman, Senator Hoffman. They're co-chairs of finance. There's only two positions. So Senator Olson is the other co-chair of finance. There wasn't a position for him. So Hoffman and Stedman from finance are in the conference committee. On the House side, you've got Schrage is co-chair of finance, and then Senator or Representative Edgman put himself on instead of another co-chair of finance. So Edgman's like, no, we're not putting Representative Josephson on there. we're not going to put him in a position to deal with this pipeline issue. We're not putting Foster on there. I'm going to put myself on there. So now you go to a free conference, and who's he going to appoint then? Yeah, I have serious reservations about what it would look like afterwards. Can it get any better than this at this point? Yeah. It's oh man. The light is being shown on, I don't know. Yeah, the corruption's not the right word, but it is intentionality. It is the intention of the legislature to take care of itself and take care of government. It is not to take care of people, because passing a bill that enables a pipeline to potentially get built is taking care of people. That is free enterprise solving a problem. That is not the focus of these people. And the light is being shown. And it's not just Alaskans that get to see it. It's the entire world. Like, people all over the world are looking at the priorities of the state of Alaska, and they're scratching their head. They're like, where did you come up? Alaskans, where did you come up with these people? This is the best you can bring to the table? I don't know. Blame the legislature. You can blame Alaskans. They're the ones that sent them. You obviously don't know what you have in this state. You don't want a pipeline. It's crazy. It's crazy. Dean says it can't get worse. I beg to differ. I beg to differ. If the free conference committee's got Giesel and Wielkowski on it, yeah, it would get worse in a heartbeat. Maybe it would just get quicker. We would get to the end result, which is utter failure here. Yeah, it could get worse. Definitely could get worse. So I don't even know if you can reach these people. Like, I'd like to say, hey, you need to reach out to your senator, your representative. You need to call and send an email and engage these people. I think we're past that. I don't know that that's going to work. Everything happens for a reason, right? Can't see, and I don't understand why we're having to go down this path. I don't see it. It doesn't make any sense. It's like the people with the most self-centered, selfish people are the ones making the decisions right now. And they don't have everybody's best interest in mind. They're 100% looking at what their blinders on and what they see as important. Taxes, government spending. It's a challenging environment. Ineptitude is right. It's probably the biggest word, ineptitude. Yeah. Is there a federal takeover if they just fall flat on their face? Maybe that's what's waiting. We need the quicker we can just trip out of the gate here and fail, the better off we'll be, because we're burning the candle at both ends, right? Glenn Farn's like, come on, okay, we don't need to talk about this. Let's just vote. Let's get it over with. Rip the Band-Aid off. You guys are going to fail. You can't get out of your own way. And then maybe we can get a different partner to work with. I think there are folks at the Department of Energy that would love to work with them. Anyway, you want to send a message to the legislature, now would be the time, and tell them in a very short email that a pass-through entity tax is the wrong thing to do. This is the wrong time to have that conversation, and to pass the House version of this bill. And that's it. They just need to be overwhelmed with that message. We need a pipeline, pass the House version. This is the wrong time to be having a conversation about pass-through entity taxes. It's the best I can say. We could put a news bulletin out, put a blurb in the newspaper, or send a social media post apologizing for our legislature. I mean, a lot of good it will do, right? Make us feel better. Anyway, Tower Garden's going good. Animals are going good. Farm's growing. It's not enough hours in the day to get everything done. You would think since we have daylight pretty much all day, you'd be able to get more done. But yeah, anyway, here I am for yesterday was almost 3 hours having a chat when I could be out doing other things. Sacrifice, right? Thank goodness that I enjoy this, and I hope that it means something to folks that this is actually helping the process. If nothing else, it's helping shine the light and help people understand what's happening down there. I mean, frankly, the couple dozen people that are participating, would you have known what's happening if I wasn't doing this? Would you have watched? And I don't know. I hope there's value here. I hope that my time is not wasted and it benefits us in the long run. That's what I hope. We may need a change in the legislature before we have any sort of positive move towards a pipeline. I don't know. Maybe this is a one shot and you're done, because investors are like, yeah, fool me once, shame on me. Fool me twice. Or fool me once, shame on you. Fool me twice, shame on me, right? Are they coming back at this point? They're like, we don't trust Alaskans. They are a different breed. They do not know what they want and not trustworthy. All right. Thanks for the kind words. We'll keep it going. I don't know what, hopefully we have something new to talk about tomorrow with regard to another conference committee or something like that. We've about exhausted what was shown on Wednesday of note. Department of Revenue did come and have a conversation. We could talk about that, but it was really more of what we've seen in the past. So anyway, there might be some other stuff we could talk about too. So I'll give it some consideration here, and we'll see what we can talk about tomorrow. Anyway, I guess I should check my calendar really quickly here. Yeah, we're good. Okay. Well, we're going to call it a day. Thanks for joining us, and we will see you tomorrow. Have a good night.